we're seeing record physical deliveries on COMEX and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20, citing again they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25-25-25-25, stock bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this.
The precious metals market has entered a critical period in recent months that is characterized by quiet accumulation rather than turmoil. While short-term price swings are the focus of popular headlines, the true story is being told behind the scenes. An increasing mistrust of the Western financial system is indicated by the steady absorption of gold and silver by central banks, sovereign funds, and private wealth throughout the East. Veteran bullion expert Andy Schectman has been cautioning that these actions are not coincidental, but rather a deliberate reallocation of world reserves away from the US dollar. Countries that were previously satisfied with holding treasury bonds are now accepting deliveries of actual gold. Concurrently, Western vault inventories are falling to all-time lows, highlighting the weakness of a system based more on paper promises than real assets. As Andy explains, this isn't simply about precious metals, it's about the quiet unraveling of confidence in fiat money itself. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets.
There's a lot of stories like that. He's just so full of integrity. It's just absolutely amazing working with him. So I will absolutely pass that along for you.
Yeah, man, you don't get to be around as long as he has without being honest and having integrity and not without being a good guy. So thank you for doing that. And I guess we'll just jump right in. And I guess I want to start with the big picture, Alan. You know, a strong dollar makes exports expensive and U.S. labor uncompetitive. And I think if there's any nobility in maybe what Trump is trying to do is to reshore manufacturing. And with policymakers questioning King Dollar, that would have been the knucklehead Jared Bernstein dethroned King Dollar, and White House Vice President Vance writing on White House letterhead that Triffin's dilemma is actually a problem for the U.S. now because of the evisceration and hollowing out of the manufacturing base. And the Genius Act, tying stablecoins to treasuries for synthetic demand for the treasury. My question to you, first question, is you think the U.S. is quietly tolerating or maybe even engineering a weaker dollar to possibly restore and reshore manufacturing?
Yes. The short answer is yes. I definitely think they're doing that because the incentives are such that they kind of have to. There's really no option. The dollar does need to be weaker, and this is part of Triffin's dilemma, and it also happens. We see it with cryptocurrencies, which is kind of funny. There's that sort of tension about, like, you issue all the coins to the founders, but then if you want anyone to use them, you have to sell them into the market, but that puts downward pressure and downward value on the coin. So there's that constant balancing act. The same thing happens domestically with a fiat currency, and of course the same thing happens globally when you have the world reserve currency. So that's the Triffin dilemma. So yes, I do think there is a engineered plan to weaken the dollar relative to other fiat currencies. And of course, that means relative to gold and silver.
Right. I think that's important to do so with AI taking 50% of entry-level jobs in the next few years, with 60% of the country with no college education. We don't make anything anymore. There is nobility in realizing that as a country, you must not be reliant on the world for your manufacturing. And I'm glad you see it that way. This has been something that's been on my mind for a very long time. And I think that also sets the stage for my next question, which is how private players may be reacting to this. And is there really this private entity, or is it commingled with the government? What I mean by that is Bo Hines, Trump's crypto czar until August, is now the CEO of USA Tether. And Tether is taking U.S. Treasury yield as being backing the new stablecoin in the Genius Act and converting it into gold and Bitcoin, the very assets that rise when the dollar weakens. Is this more diversification, or specifically, do you think Tether could be front-running and, in fact, let's just say accelerating U.S. policy and in the process undermining confidence in the dollar to create this weakness in the dollar and perhaps even to have the dollar depreciate or devalue underneath rising Bitcoin and rising gold? But I think, to your point, information is just as valuable as money. We're seeing, and have been, the central banks front run this gold run for the last 5 or 6 years. And kind of leads me to my next question. We're seeing record physical deliveries on COMEX and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing, again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25-25-25-25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on COMEX, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says, and has publicly been saying all along, that she believes Trump will tie the back end of the treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year with the Stablecoin Act running the front end of the market.
Following Andy's initial analysis, the discussion turned to the more profound political and economic factors underlying this worldwide change. The United States may be purposefully letting the dollar depreciate in order to bring manufacturing back home and regain competitiveness due to its mounting debt and deteriorating industrial base. Essentially, governments are prepared to exchange short-term currency strength for long-term economic balance, which inevitably raises the significance of gold on the international scene. Real assets like gold and silver are increasing in value as the dollar declines, and record central bank purchases are clearly communicating that trust is shifting from paper money to actual reserves. On markets like COMEX and the LBMA, we are witnessing a planned reorganization of the global financial system rather than haphazard purchases. In this new environment, gold, and to a lesser extent silver, offers more than just protection. It represents a parallel system of value, one that continues to hold trust even as fiat currencies and financial structures show growing signs of strain. Make sure to like, subscribe, and click the bell icon to get notified whenever we upload new content. We really appreciate your support.
Do you think gold is being reintegrated into the system here in the States? Possibly. And maybe even across the globe as a settlement system with the BRICS nations? Big question, but really what I'm saying is gold now transitioning into the monetary system by the massive inflows we see coming into the United States, or is it just simply arbitrage and tariff threat?
I think it's more of the former. I definitely think that we're headed towards a new monetary system. You had Secretary Scott Bessent say that, he used to have a fund. People would call him a gold bug. He loves gold, and he thinks that a new Bretton Woods is going to happen in the next 4 years, right? He said this right before Trump was elected, and he wants to be a part of that. So that's a new monetary system. He wants to be a part of it, and he likes gold. You also have Trump saying that, there's something nice about having the dollar backed by gold. I kind of like that idea. So, okay, fine. There's a lot of clues that suggest this. And to your point, Judy Shelton, I don't think she would be saying so confidently that Trump is going to issue gold-backed bonds if she didn't know more about that and if it wasn't being discussed, very, very seriously. So there's always a reason it may not happen, or maybe the timing is off. But I think we can take that as at least a very strong intention by the administration to move in this direction. And to me, that's sort of the key indicator rather than the specific metric it takes or the specific date of launch. So yeah, if we see that, and then if we look globally at central banks, we've seen a sort of right sizing of the gold to GDP ratio of a lot of European nations. And this is over several years. So some nations are actually selling a little bit of gold if they have too much relative to, relative to a certain debt to GDP ratio. Others are accumulating. And so they're sort of lining up. It's kind of amazing. I learned about this through a Zero Hedge article a couple years ago, and it's continuing in that path. Of course, China is vacuuming up gold all over the world. It's not only the number one producer of gold, but also the number one importer of gold in the world. That's very unusual for a commodity. So central banks are absolutely grabbing gold. They're right-sizing it. They're preparing for some type of new monetary system, and it's probably going to be backed by gold. It's not going to be silver. It's not going to be Bitcoin. It's going to be gold. And so whether we get that in 2026, I don't know. But what that signals to me is I got to get my gold ahead of time and then just wait for them to sort of, hash out the details. So pretty simple trade.
Yeah, I agree. I think, until the central bank stop buying, the bull run in gold is certainly alive. I agree with you completely and totally. You mentioned Bitcoin. One of the reasons that I'm so thrilled that Michelle McQuarrie is here now is because one of the things that I have found particularly distasteful, regardless of my opinions on Bitcoin, is the constant divisiveness between the two camps, the mutual exclusivity. I admire that about you and Mike, in that I know Mike is someone who believes deeply in precious metals, but has an opened enough mind to look at the other side. I don't think you ever grow unless you listen to other people's viewpoints. I am not saying that I am someone who advocates for Bitcoin, but what I am saying is that the communities should be, I think, united rather than divided, as the message that we focus on is largely the same. In fact, I was looking at your X page, and there was one comment where you had commented on, the guy said, Bitcoiners know Bitcoin better than gold, and they know the reasons to own gold better than the gold bugs do. Now, I don't know that I agree with that or not, but what I'm saying is that largely we see the world through the same lens. Choosing the vehicle, one that maybe focuses more on profit and the other on preservation, well, to me, that sounds like a marriage made in heaven. I guess all I'm trying to say is that I think that it's a mistake to ignore Bitcoin every bit as much as I think it's a mistake to ignore gold and to poo-poo it. And I think learning from people like yourself about Bitcoin's role is important. One of the reasons I wanted to have you here and ask you, and I guess here is the big question. It's unequivocally known that Tether is stacking Bitcoin alongside gold. To me, and I don't, I signal out Tether because they're backing, largely they will back all Bitcoins with U.S. Treasuries. In fact, they're already compliant to the Genius Act, and in backing it with U.S. Treasuries, they get to keep the interest that is accumulated. They can't give that interest back to the stablecoin holder. With it, it appears as though, with the $8 billion in gold they have already, and their attendance at the Beaver Creek Mining Summit, they're going right to the miners, and they're also buying Bitcoin. They own a lot of it. So to me, that feels like a signal. It's not just a hedge.
As the discussion comes to a close, Andy Schectman makes the connection between everything we're witnessing, record gold delivery on COMEX, declining stockpiles on the LBMA, significant central bank purchases, and a much more significant change occurring in the global financial system. These behaviors, in his opinion, are indications of preparation for a new monetary order rather than haphazard market movements. Andy claims that prominent individuals like Judy Shelton and even former President Trump have alluded to plans to restore gold into the American monetary system, potentially through digital assets connected to precious metals or gold-backed treasury bonds, a new Bretton Woods-style system in which trust in money is once again linked to tangible worth rather than government debt might begin if that occurs. He notes that the world's biggest importer and producer of gold, China, is amassing gold at a rate never seen before. This worldwide trend indicates that countries are getting ready for a monetary system that is backed by actual gold as the anchor of trust rather than silver or Bitcoin. And he claims that regardless of when this change occurs in 2026 or later, the message is clear. People who are are aware of what is about to happen are buying gold now, before the new system is formally established. In the broader discussion, Andy also calls for unity between the gold and Bitcoin communities, noting that both sides share the same goal, protecting wealth and preserving freedom in an unstable financial world. He argues that while gold focuses on long-term preservation, Bitcoin represents innovation and adaptability, and together they could play a powerful role in shaping the next era of money. Thanks for watching. If you like this video, give it a thumbs up, subscribe, and turn on post notifications so you